Good morning. Ira Epstein with your Morning Flash Update. And this update is for Wednesday, the 25th of September, 2024. Time right now about 8:10 a.m. Central Time. Mixed day so far in the stock indices, but you've set 41 new records in the highs in the S&P. It's not a market that acts like it's anywhere near done at this point. Remember, you have an election. The presidential election isn't far away. You will get into that time frame in about 3 weeks where you look to see markets breaking in front of the elections, generally rally back after them. I wish it were that simple, but that's often what does happen. As we're looking now at the soft markets, you can see OJ down for a change. I don't know if it'll last. Sugar's down a little bit. It hasn't been down in a heck of a long time. The dollar just cracked through the 100 level back to 99.91.5, and that's giving a bid to the euro. Now, the action in the Swissy has been pretty radical. Let's first talk about the day's action today, and part of this is that. We had the mortgage market headline recap for the weekend of the 20th. So that was a week ago, and you could see, number one, up 11% in the index. The purchase index only up 1.4, but the refi went bananas, up 20.3%. So as rates were getting closer to 6%, and they were at that point, the people came out of the woodwork. You're not attracting the new buyers. We saw KB Homes yesterday come out with their aftermarket earnings report, and the stock's down about 6% this morning. As their book isn't full, the profit margins are slipping as well. So, it's not that people don't want homes, it's just that the mortgages and the price kept them away. But now that you are getting breaks in mortgages, and I think there'll be continued breaks for part of the year, I think you will crack the 6% level. I don't think you'll crack the 5% level. But I think in that zone is where you're going to see the buyers step in. New home sales, talking about that, are going to come out this morning at 9 o'clock. We'll see how they look. They're expected lower by a fraction. The People's Bank of China this morning cut the rate of the medium-term lending facility. It's called MLF. So when you read about MLF, that's what it is. And they went down to 2% from 2.3. Now, that may not seem like a lot, but that is the biggest break since 2016. So it is a big deal, and this is part of their package they did yesterday, which now the market is looking at that package and going like this. Is it really going to be enough? Remember what I told you. You get markets that popped on it, and I question if they'll hold that pop. Crude oil is a great example. You need orders to come in, not that they're doing the stimulus and down the road it'll happen. China also set off an ICBM missile test this morning. That's rare. They don't do very many of them. Maybe it's a message for the West. Swiss National Bank, as I said, they are set to cut interest rates. Now, the debate and what hurt the market and why the radicals swing overnight, what some of the traders came out and started saying is the market was up to 119.92. It fell 117 points from that high. Now it's coming back. Maybe they'll go 50 basis points big. Now, the reason they're saying that is beyond me. When I looked at the survey of Bloomberg, out of 32 analysts, only 2 thought that was possible. So that's not very many that are in that camp. But the story goes that the head of the Swiss National Bank, this is his last meeting. His tenure is over September 30th. Maybe he'll go out with a big bang. And he has been known to pull shots. He'll say one thing, do another, so you got to be careful. He's not a man that I have admired. When you take a look at what is going through here in stock indices, I said down, gold is nonstop. It seems determined to go to the 2,700 level. The silver market backing off. Copper, I think, is a little bit ahead of itself on this Chinese news, so I'd be cautious there. And when you come to the bonds and notes, you notice they're all in the red. So you're still adding yield back. Ever since the Fed made its rate cut, they have actually been adding yield. And as I said, be careful right here, all right? And we know that Hurricane Helen, she's not named a hurricane yet, but she will be at any hour. The miles per hour to do it are very, very short distance from where we're at. I just read the latest update. And it could be a Cat 3 storm by the time it heads in. Right now, the biggest area that they're looking for is the area from the Louisiana right across into the Panhandle, but the storm is so broad, it's throwing a lot of rain everywhere. When I take a look at the grain markets, you can see they're backing off a little bit this morning, not doing anything major, and they're sort of whipsaw is where right now in that time of the year where the farmers are going into the fields, and this last rain may be the point where they say, okay, I'm not going to leave my corn out there too much if rain's coming, then I'd have to dry it more, and they start picking things up. We'll see if that is in fact the case. Rains were they were and they are going to be more widespread as you got remnants of this hurricane going to hit in the Midwest probably by the weekend. So you want to keep your eye on all that. And of course, you got to be careful in Atlanta and the South because you're going to see this storm go right up that way. I'm Ira Epstein. I will talk to you all at the end of the day with your market wrap-up. You have a great trading morning.